All right, I want to welcome you to another trade trend market overview. This is a special session. I want to welcome you all. Thank you for being here with us this evening. This is Richard Van Rich. Before I bring on Jeff Tompkins, I just want to make sure everyone can hear me. You can see our screen here. So if you can, there's a chat box. We're going to pull it up and type in, yes, I have cabin fever, or anything like that. Seems like we all are probably happy just to be off of Netflix right now. Hope everyone's doing well. If this is your first time on one of our sessions, your microphone's muted so that we can hear Jeff. And there's a Q&A box as well. If there's any sort of questions, we have time to get to those at the end. And it is going to be recorded, so if you fall off for whatever reason, we'll be able to get the replays out to you guys when we can. We bumped up our webinar limit to a couple thousand people, so we anticipate a lot of folks to be joining with us tonight. This is definitely a special, extreme time of the markets, and really glad you guys are here. So with that being said, I'm going to hand the mic over to Jeff. So Jeff, if you want, you can grab this screen.
All right, got it. Thanks, Richard. Can you hear me all right?
Yeah, I hear you fine. It looks like people can hear us and see us in the chat too.
Oh, good. Welcome, everybody. Thanks for joining tonight on a special event that we're holding primarily to help you guys navigate the current market conditions and extreme volatility that we're seeing surrounding the COVID-19 novel coronavirus that is impacting virtually everyone around the globe to some degree. Certainly, it's having an extreme impact on our economy and our markets. And so the purpose of our session tonight is to help you guys again navigate these times of uncertainty in the market. And we'll do that by mapping out some of our levels on the S&P, looking for supply and demand points in the market. We'll talk again about the rubber band effect that we touched on our last session together. And this will help us kind of look for the supply point that we may see a bounce back to at some point. And just keep in mind, the market is going to go back up. So while these times can be challenging and difficult for a lot of us, especially if we're buy-side traders or long-term investors, keep in mind that the market will go back up and it will recover. So this really becomes a game of patience and perseverance. So please keep that in mind, especially if you're, like I said, a buy-side investor, long-term trader. We will hold a Q&A at the end. If you have any questions as we run through our market overview, feel free to type those either in the Q&A box or the chat box. There's two separate boxes. Either way, either myself or Richard will see those and we'll address them if they're pertinent to what we're covering at the time. Otherwise, we do hold the Q&A. For those of you who are new to the session with us tonight, we hold the Q&A at the end as well. All right, so let's go ahead and get into this. So I want to pull up a chart of the S&P, get over to my platform here. Actually, I've got a chart of the futures up right now. I was just taking a look at these before we started our session tonight. So these are the E-mini S&P futures, the ES. And it looks like we're kind of starting to push a little bit higher on the E-minis. So I watched these very closely in terms of what to expect for the next trading day, in the market. But these basically track the S&P 500 index, the E-mini S&Ps, the ES. And often we'll get similar buy and sell signals from our trade trend software on the E-mini S&Ps. But because these trade around the clock, some of the price action and whatnot is a little different. You don't get as much gapping as you would in the index markets like the S&P and the NASDAQ and the Dow. So you may get some slightly different signals here, but we had two nice sell signals on the way down in this sell-off. But I'm going to go ahead and go over to the S&P 500 index because I realize we're not all trading futures here. And this is quite an interesting picture, certainly in terms of severity of this or steepness of the sell-off. We really haven't seen anything to this magnitude since the crash of 1987. We've really basically, and I'm pretty zoomed out here on a daily chart going back a few years, almost a few years, and we basically lost an entire year's worth of, really closer to a year and a half's worth of profits in the matter of just a few short weeks. And it is normal for us to sell off steeper than we go up in the market. Of course, if you look at some of these previous corrections back in 2018, obviously these take out a lot of gains that take longer to accumulate than it does to lose on these sell-offs. But and that that's just the nature of fear and greed in the markets. But these can create really nice opportunities for us when things turn around and rebound. So we're going to talk tonight about some ways to gauge that, some levels to watch, and supply and demand points to look at. Now, here's something I want to point out in terms of, I guess I would term it as validation or confirmation, and off of these levels that we're going to be talking about. When we're in such volatile, uncertain times, I'll be very cautious, and I won't want to buy on a touch of these levels. I look more for a rebound with a continuation, some sort of a reversal with confirmation of continuation of that reversal before I really get in. And these are tactics I use in my hedge fund in terms of timing entries in the broader market. So just keep that in mind as well as we look at these levels and supply and demand points. But something significant did happen today in the broader market. And if we look at the 2350 level on the S&P, you'll notice that we came down and touched that level and actually just went slightly below it back in the sell-off of December 2018. And this is significant because if you look at the peak to trough here in this market, and just kind of take a high level kind of quick picture of this price action right here in 2018 and this right here. Now, obviously, the pricing is completely different. The severity of the sell-off is completely different. But see how similar this picture looks to this one? We just had this kind of nice, steady, well-defined uptrend that we also saw here in the middle part of last year and into the early part of this year. And then it's wiped out. Of course, again, just because of the nature of the catalyst behind this sell-off, it was much more severe than the sell-off in December of 2018. And of course, the higher you get up in the market, the more vulnerable you are to any sort of geopolitical event like a virus or something that has unknown outcome to damaging profits. But this is a very similar picture, just not quite as extreme. And so this is what I will look for when I'm analyzing the S&P for reversal points or demand points where there's actually going to be some demand for buyers in the market. And when we look back at December of 2018, we see that occurred right near 2350. So if we zoom into today's price action, what happened? Well, we saw a rejection and reversal of 2350. Now, to be clear, I'm not trying to call a bottom or make any sort of prediction here. All I'm saying is that there's something to pay attention to here at this level, because we opened up above it this morning at 2436, and we sold off fairly significantly today and then reversed towards the end of the day to close back above 2350. And we actually closed 2398.10. So this could end up being a sign of a bottom. We don't have a buy signal from trade trend yet, but it could be the sign of a bottom. So again, I'm very conservative with these sort of things. I'm just simply looking at past demand points in the market. Now, if this one doesn't follow through, if it breaks, then we'd be looking for more significant levels, like down here around 2100, where you can see going back into 2015, 5 years ago, we had a lot of what was resistance that would now be considered a significant support level. So this is a really good time to be watching this level for a reversal. These sell-offs can only last so long until buyers start coming in. And even in the midst of uncertainty, for instance, with the COVID-19 virus, we don't have any real certainty. There's still a lot of unanswered questions, more so than there are answers to questions. We don't know what the outcome of the new vaccine trial will be. We don't know the duration. We don't know, basically the story in the picture is changing from day to day. We don't know, the infection rates very accurately, the death toll. So there's a lot of unanswered questions. And of course, that's why we're having this major sell-off. But eventually, even if some of those questions don't get answered, we want to look for these demand points, because price is ultimately king. And in the absence of answers to some of these questions, we could still get a pushback up in the market off of a demand point. So this is the one I want you guys to pay attention to and watch, the 2350 level. And again, if we go back over to the futures, we're starting to kind of see a push through that. But if you watch the futures, you can see potentially how this is going to play out before the market opens tomorrow. We're kind of bouncing around here, but trying to push higher. But going back to the S&P 500, what I'm looking for is a confirmation or continuation that price momentum is actually going to reverse and go back above. So I may be looking to, looking for a reversal on a pushback above one of these bars. And a lot of times I'll wait for an actual buy signal from our trade trend algorithm to do that. But I also watch these levels very closely. But the signals can also be very reliable by themselves, especially if they're off of a level. So, if we get a buy signal off of 2300 or 2400 or even 2500, that could be very significant. The last sell signal we got on the S&P occurred right near the high. In fact, the all-time high was hit, I think, the day before on February 19th at 33.9352. And the very next day, trade trend gave a sell signal. And this was simply a warning to say that there was a potential sell-off in the market looming. It triggered the very next day. It hit the suggested sell stop entry price and got this thing right before the market really tanked. It did hit the trailing stop here. If you're following the trailing stops from trade trend on March 3rd, got us out for a really nice profit. It would have entered right here around 33.33 and then out around 30.99 for a little over 225 points in just a matter of a week or so. A lot of our trade trend members actually stayed in this thing longer or bought puts and have really made a lot of money on this sell-off. So we want to pay attention to these signals, of course, off of these major levels. And now we're going to be looking for the rebound. And again, we don't know when that's going to occur, but we want to watch these demand points. Now, the next thing I want to look at is how do we know once the rebound sets in where we should expect price to move to? Because we could get a small rebound and then a continuation of the sell-off. We could get a major rebound. I think it's quite unlikely we'll see a push back to all-time highs. But let's take a look at the technique that I use to help determine where the market will rebound, and that's the rubber band effect. So I'm going to add a volatility study to our chart, which is the Bollinger Bands. And again, the Bollinger Bands are a volatility study that are comprised of a moving average for the center band and an upper and lower volatility band. And of course, when volatility increases, the bands diverge, and when volatility contracts or decreases, the bands converge. And that's significant. Why is that significant? Because volatility always expands and contracts and will eventually reach equilibrium. Timing that is very difficult, especially in these types of conditions, but when it does happen, we have a pretty strong idea of where the volatility will contract to, and that's generally where the market broke the band to begin with. So I'm really watching the 3,200 level. Again, I think it's highly unlikely we'll make it back up to 3,400 anytime in the near future, maybe years down the road, who knows. But 3,200 is now the level to watch because that's really where this band broke and where the sell-off accelerated. All right, and for those of you who have attended past sessions of ours, you know that we really look at this very closely, and we've gone over many, many examples. In fact, 100% of the time, up until this sell-off, which is still to be determined, 100% of the time when one of these Bollinger Bands breaks, the market comes back up to that level. If you go back on your charts, you can look at it and find it over and over again with 100% reliability. And there's not much in the market that can give you that kind of reliability. But you'll see here that when a band breaks, at some point in the future, the market comes back up and retests that level where it broke. And there's a varying degree of these examples in terms of how severe these band breaks are and the rubber band effect is. But anytime the price touches the lower band and then continues to trade along the band or below the band, the market will come back up to that level at some point. Okay, so you can, again, go back on your chart and find this over and over again. And so I use this sort of information in my own trading. I do trade for a living for myself, as well as in my hedge fund. So this really helps me determine when I start to see confirmation of a rebound, where I can start looking at scaling out of a position or taking profits as the market rebounds, okay? And some of these take longer than others. Some of these happen very quickly. Here was a band break way up here that we didn't get back up to until months later. So these take varying degrees. That's a relatively long one. Most of them happen fairly quickly. Here's a pretty significant one and a very quick snapback. This is what I call the rubber band effect. There's another one, snapback. So again, these create very nice buying opportunities, and you can find demand points, especially when you combine these with static horizontal levels in the market, like we just looked at the 2350 level. Okay, so we are obviously in a very significant market sell-off with a high probability of a rebound up into this supply point around 3,200. Now, the length of time it's going to take for that to occur is the unknown. But it will occur, the market will eventually recover, and that's really valuable information to have as we're planning our trading strategies and analyzing the market to determine which direction to be on, which side of the market to be on for our trades. Okay, so I want to pause there and see if there are any questions that have popped up so far that we want to clarify or cover, or if you just have any kind of general questions about the market, feel free to go ahead and type those in the Q&A or the chat box. And Richard, you can let me know if there's anything that's come in yet that we want to talk about.
Sure. Some people are kind of nervous about the fall, and they're wondering, is it best for them to just, sit out of the market and just wait till it's over, or?
Yeah, I mean, certainly.
Personal choice.
There's so many different ways that we can play these conditions in terms of strategy, whether you're using options or buying stock. I think that, and again, I'm not going to try to call a bottom. You probably heard over and over, trying to call bottoms is like trying to catch a falling knife. It's just not a smart thing to do. And so to me, calling a bottom would be buying at a level without any sort of confirmation of a reversal. Certainly, the lower we go, the better the opportunities are going to be for those who are able to buy and hang on for a rebound. So that takes, of course, very disciplined risk management, money management. You really want to leave yourself enough room. I wouldn't go all in cash, right now, personally, but using a small percentage of my portfolio, these can be attractive levels to get in off a rebound on one of these levels. And then what I do often is I use techniques because I think one of the kind of characteristics of a successful trader is to be able to admit that you don't know everything, that you're not always right. And, I can certainly do that. And that ends up translating into my trading behaviors, in that I won't try to call a bottom, but I may use some tricks and tactics that work very well, like scaling in. So I may not get in right at the bottom, but I may buy near the bottom. And if things keep going down, I'll dollar cost average down into the second half of the position. Or you can chop it up even more, especially as things get more volatile. Sometimes you can chop it up further into like quarters, maybe enter 25% of your trade. At one point, if things move against you, you can enter another 25%. If they keep getting bad, you can enter another 20, and so on and so forth. That way, you're averaging your down into the position. You're not, trying to pick an exact turning point. And I think that's a pretty conservative thing to do at this point, considering the magnitude of the sell-off we've seen so far. But admittedly, we're in a lot of uncertainty, and this thing could certainly get worse before it gets better. We just don't know that. So again, depending on the strategy you're using, it may be wise to sit on the sidelines, or if you've got the patience and discipline and capital to stay in, the more this goes down, the more money people are going to make that can ride this out, that get in as the sell-off steepens. So I always tell people, look at this as an opportunity, not something to be scared about. This has happened over and over again. I mean, this is definitely an unprecedented sell-off with a lot of unique catalysts, and just in terms of the severity and the fact that we did sell off from an all-time high in the market. Not all of these sell-offs occur from all-time highs. So that's another major thing to consider. This is a bad one, but we've always recovered. Every sell-off that has frightened people, every black swan event, every market crash, all the flash crashes we've seen, the market's recovered 100% of the time. And I don't think this is going to be any exception to that. I think it's just going to test a lot of people's patience and discipline and ability to have good money management. But again, I tell people, look at this as a really good opportunity. These opportunities don't come along very often. And so, if I go out further on my chart here, even we've been in a 10-year bull run, right? So I'm going to go out 15 years. We've seen some obviously very, very significant sell-offs going back here that have panicked a lot of people. I mean, this was the '08. Okay. This is really, really bad. The market lost more than half its value. Okay. So this is kind of what we're looking at now. But if you had gotten in at these prices down around 700 in the S&P, we topped out around 3,400 before this sell-off. So that's a huge, huge return if you can be patient and buy in, scale in at these lower levels. So that's kind of my answer to that, long-winded answer to that question.
There's a handful of good questions in here. Do you typically buy and sell based on trade trend only?
I do predominantly use the trade trend buy and sell signals, but with that said, I don't take every one, and I always use the confirmation. So, like as an example, on the S&P, we did have a buy signal. It looked like momentum was kind of shifting back to the upside. So the buy stop order would have been listed right above this candle where the warning is. Remember, trade trend gives you 1 to 3 bars in advance of warning in terms of whether this trade is going to trigger. And this one didn't trigger. So over the course of the next 3 bars, we never hit that buy stop entry price. And this is one, I think I actually did put an order in. I was a little more conservative, and this was an inside bar, meaning that the range of the bar, the high and low range, was within this other candle that occurred the day before. And I think I put my entry order way up here. So it never even got filled, no harm, no foul. I was in this signal. Anytime I get sell signals off these market highs, I generally always take them because there's, again, the higher risk of a major correction from an all-time high. So this one was a major opportunity that I did take advantage of. And I mainly a lot of these signals are going to be similar on the futures. I mainly trade these off the futures. But again, that signal came in the exact same day on the E-mini S&P futures as it did on the SPX, which is February 20th. But I was in this trade, and actually on the futures, it gave us another sell signal. It gave us that same buy signal, but it didn't trigger. And then it gave us the sell signal that captured another huge move on the E-mini S&P futures. So it basically almost caught this whole thing on the way down with two separate signals. This is where the really big money's made. And so I've done, very well over the last couple of weeks in my own trading. And I do, look at these signals, but again, I don't take every one. What I generally look for is I try not to really trade too much against a trend unless, again, we're from an all-time high. And then I probably will look for some extra confirmation. What I do really like is if we get a buy signal now, I'm going to go back over to the S&P because I, again, realize a lot of people don't trade futures. If we get a buy signal now around this low, I'm going to be jumping all over that because on a confirmation, again, we would use a buy stop order above the bar where the green arrow occurs. So we wouldn't get filled unless the market actually follows through with the momentum reversal. I'm going to jump all over that one for sure because I know then we have a high probability of going back up to where the Bollinger Band broke. And really, I can make a lot of money on that rebound as more buyers come into the market at these attractive price levels. So I'm very strategic with which signals I take, but often even just taking every single signal can result in profitable situations. It's just I try to kind of filter out the better ones, and I do that again using the Bollinger Bands. A lot of times the signals off the bands can be pretty good. When you see them like here, where the bands are pretty tight, those are ones I would kind of tend to avoid because you don't have a lot of room to move till you hit the lower band. And unless that band breaks, which it doesn't do most of the time, there's just not enough profit potential there. But some of these signals, like here's a buy signal off the lower band, can result in some pretty nice profits there. Sell signal. This is one. So these are ones I really like. After a band break, then you get the sell signal, and there's the nice move back down. So these can tend to be pretty good. Again, off the upper band here, got some nice ones. So I use both static and dynamic support and resistance. So dynamic support and resistance being the Bollinger Bands, the upper and lower band, and then static horizontal support and resistance being the horizontal levels in the market that we just looked at. Like 2350 on the S&P. And of course, all this can be applied to to individual equities. It can be used with options. There's a lot of different ways to play these. The nice thing about using options with these signals, in fact, I just did a video a couple days ago for a colleague of mine that offers trade trend on their platform, on the Wealth Charts platform. He wanted to see what buying put options would look like off of just this one signal. So I ran a back test for him showing that if you just bought 10 at the money put options on this sell signal and held those into the I believe August 15th expiration, sorry, not August 15th, March 15th or whatever that last week's expiration was, it was about an $80,000 profit on a $5,000 investment in those 10 put contracts. So you can make a lot of money too with directional options plays on these signals when you get big moves like this. That's kind of how I look at it. But I do look for the reversal signals off of very strategic dynamic and static support and resistance.
So like when let's say we do get a signal off the bottom, would you think it would be advantageous for people to do buying stock versus say buying long options because the options may be too inflated because implied volatility is high?
Yeah, that's a really good point, Richard. So right now, IV implied volatility is so high because of the sell-off that options are just extremely expensive right now. And I'm glad you brought that up. So with the sell-off, I would be more apt to be looking for long equities or ETF plays. Like a leveraged, ETF that tracks the market can be a great opportunity in these kinds of market sell-offs. So like the SPXL is basically the leveraged ETF that tracks the S&P. Now, to be clear here, buying and holding leveraged ETFs is a terrible idea. In fact, they underperform the index that they track because if you factor in all of the retracements or down moves in the market, you have to remember that the market then has to come back triple versus the actual index that it's tracking in order to break even. And so they don't actually, it's kind of hard to conceptualize, but if you actually run the performance numbers of buying and holding leverage ETFs, they underperform the actual index they track. Most people would think, well, how could that be possible? They're the leveraged ETF. But again, that's if you buy and hold. But they can be good, and this is really what leveraged ETFs were designed for, are opportunities for short-term trades or intraday trading. So they can be a great tool after a major sell-off to get back in on a long signal. So again, this is the SPXL. This is a Direction Shares leveraged ETF. And yeah, buy signal off of a major sell-off like this could be a really good opportunity to get in. And this thing was trading up, over $75 a share before we got the sell signal to go short. And it's bottomed out now here. It rejected the $20 level today. And so again, if we get a buy signal near this low, what I think is going to, be a low potentially, then that would be potentially a good opportunity to go long. And generally, again, I look for to hold the trade. Of course, Trade Trend does give you the trailing stop levels, but if you want to be strategic or do this on your own, I look to hold the trade into the dynamic resistance area, which would be where the band broke, or I might start scaling out at the middle band. This is, of course, the mean, the moving average, which is going to be lower than where the band broke on a sell-off. So that would be, potentially one point we could see a reversal back down. So that might be a good place to scale out, take profits on half the position, and then if we do make it up to where the lower Bollinger Band broke, we can then scale out at the second half. Those are kind of some of the tricks and tactics I use to manage positions like this. But yeah, I'm keeping a very close eye on buying opportunities down here right now, both in my personal account and in my hedge fund.
And do you mess with like inverse ETFs or anything right now, or?
Yeah, inverse ETFs are a great way to play the market to the downside. So the inverse of the SPXL is simply the XPSS, SPX short. So you'll just see this thing move to the opposite. And these are nice because a lot of the ETFs, they won't float you shares. You can't short them. So you just trade the inverse. If you wanted to, probably can't short the SPXL. So you simply buy the SPXS and you get the inverse move. And the nice thing is Trade Trend's generally just going to give you the opposite signal. So you still get the signals. This one gave the buy signal on the same day as the sell signal on the inverse of this ETF. So, and then it actually got you in another long trade here. So these are great tools to play the market without having to get into stock picking and things of that nature, which can be very, very challenging right now. Another one I watch is the TQQQ. This is also a leverage ETF that tracks the NASDAQ Qs. And again, we got the sell signal same day as on the S&P. Nice move to the downside. Haven't gotten any confirmed buy position yet, but again, I'm watching this one as well for an opportunity to get in back on the reversal. And of course, we're not really, talking about fundamentals here. I ultimately pay attention to price. Price really has the final say about regarding what happens in the market. And so, trying to get caught in the weeds of the fundamentals of these geopolitical catalysts can be very, very tricky. And there's just so much information being passed around and so much to take into consideration that you're ultimately going to end up with, analysis by paralysis or paralysis by analysis. And, it's just too much. And, when you can learn to read the price action, that's enough for me to be able to determine, whatever the underlying catalyst is, what the drivers are, where price is ultimately going to go.
Okay, let's see. A handful of good questions in here. So for all the iron condor credit spread traders, you tend to kind of stay out of the market now, or just do one side?
Yeah, spread trades are very challenging right now because there's a high probability that your spread's going to get breached. So generally, debit spreads are, to play these. In fact, probably if I was going to do an option spread, because I mentioned with higher implied volatility that you wouldn't want to be buying calls on a rebound because IV is too high. But debit spreads are a great way to kind of damper that high implied volatility because, of course, you're buying a one leg of the option at one strike and then selling another. So the short leg helps damper that. What's referred to as IV crush or implied volatility crush, where on a rebound back to the upside, where you're going to get a drop in implied volatility, which of course is inversely correlated to the move in the underlying security, then that kind of buffers that, dampens it, and those can be a great tool. Debit spreads, so you could do like a bull call spread or a bear put spread. You pay a debit for those, and they can be a great way to play these major high volatility market environments without overpaying for the option premium and without being as vulnerable to volatility crush when implied volatility ultimately goes back down. So yeah, that's if I'm going to use options to play these kind of moves, that would be the way to do it. But in terms of like credit spreads and things, those are very, very challenging right now because the market's just too wild, too volatile. And so if we do run a credit spread service. If we do any of those types of trades, try to go in very small. This isn't the time to be swinging for the fences on those, or just stay away from those strategies altogether.
Let's see. Frank wanted to know. He said he's been playing with trade trend for 3 months on Metastock. He says as when the market's stable, had a pretty easy way of using it. But as it is today, how do you identify best buy signals for puts and calls and options?
Yeah, Frank. So again, primarily looking at the static and dynamic support and resistance levels. So when we get a major band break like this off the lower Bollinger Band, looking for that buy signal off of a lower band. This thing is going to eventually, mark my words, this is going to eventually come back up. It's just a matter of time. It's a matter of, not a matter of if, but a matter of when. And so any sort of a buy signal off there would be, in my opinion, a good opportunity to get back in, get on a confirmation. So the buy signal simply gives us a warning. It will also give you the suggested entry price depending on the platform you're using trade trend on. It sounds like you're on Metastock, so that will be in the commentary on Metastock. We'll give you the entry price, and that's where you'd want to put your order in, because if you don't get follow through like on this one, no harm, no foul. You just don't get into the trade. But that's basically what I'm looking for, or very significant levels, Frank, in terms of where we want to play these signals. And the better signals are going to tend to be in market environments like we're in now, where there's high volatility. It's generally when the bands are tighter, meaning that there's lower implied volatility, that you're not going to get the big moves. Back here, yeah, this was a profitable trade, sell signal off the upper band, but it was not a huge move. But when you get a widening of the bands like we did here, and we get a sell signal, that's where the bread and butter is. And these are the ones I really, really like to get in on. And then especially once the band breaks, then I'm really looking to get aggressive if there is confirmation of a reversal off of the band. And another point too is, and I kind of alluded to this, but we want to me, trying to get into stock picking in these kind of market conditions can be very, very tricky. So rather than try to find the next big stock winner, it's generally much easier just to use an index fund. And if you want to try to really blow it out, these leveraged ETFs can be an opportunity to really beat the market as it comes back. I see Scott's asking, how do you get commentary and TOS compared to Metastock? Yeah, Scott, unfortunately, Thinkorswim doesn't offer that capability. So instead, what it gives you is just simply the order summarized up here in the upper left of the screen. So you can see on the SPXL, there was a short trade. So here was the warning. This is the red arrow. 37.71 was the low. So it gave us a sell stop limit order price of 36.94. That's basically what the commentary is giving you in Metastock. We didn't hit that 36.94 on the next day, but we did hit it on March 11th. It triggered and hit that 36.94 level, and that's why you see this red dot here. It simply tells us that we hit the suggested entry price on March 11th, and the trade is actually still open. So it got us in at 36.94, and currently the price is down at 22.24. Again, this is on the SPXL. So that's a big move of about 14, 15 points, just a matter of 5 trading days on this one. So that's just basically what you get in Metastock. It just gives a few more details in terms of commentary, but you're not missing much there. Same thing with some of the other platforms. Of course, we have Trade Trend available on multiple platforms: TradingView, Thinkorswim, TradeStation, NinjaTrader, Metastock. And we're actually launching Trade Trend on our tradetrend.com website here sometime in the next, I'm anticipating next month or so. So you'll be able to access a web-based version right off of our website as well, which we're very excited about. I am going to spend a little more, this is mainly meant to be more of a session around the market and anything you guys are concerned about or looking at or watching or wondering. And so I can kind of help you guys navigate through that. So I won't talk a whole lot about Trade Trend. If anyone is interested in learning more about Trade Trend, we're going to stay on for another 2 or 3 minutes, not very long, after the market portion, and we can answer any questions about Trade Trend for you. But we'll try to just answer the market questions right now.
Kai had a question. He wanted, because of this wild swing in volatility, is it better to do monthly spreads versus weekly spreads? And short term's kind of wacky.
Yeah, that's actually a really good question. Yeah, I would say yes. The weekly options can actually be more expensive than the monthlies. So like when I'm selling options, like if I'm selling puts or something, the weeklies are great because they tend to have inflated premium versus the monthlies. So in other words, if you took like 3 or 4 weeks of the weekly premium and added it up, it's often going to actually add up to a higher premium than if you just took that monthly premium from the monthly expiration. So weekly options premium generally inflated. I'm sure it's especially inflated now. So the monthlies can be a better opportunity. Plus, it just gives you more time to ride through these things. It can be pretty tricky trading short-term options right now.
Let's see, Casey had a question, and I've tried to answer it in the chat box, but maybe you can explain it to him. He was saying with options, how exactly do you trade a long put or long call without getting stuck in that automatic execution and expiration? So you never own the stock. Like, how do you just profit from trading the option itself?
Yeah, so, well, if you're buying an option, you have the right, but not the obligation to own the stock. So you could never be forced to buy the stock. So like if you bought a call on, let's say, the S&P, the SPX, it simply gives you the right, but not the obligation. Most people never buy the shares. They just simply trade the call option, and they trade very similarly to a stock in that you would buy the call contract at a specified strike price, and then you would simply, all options have expiration dates. So If you're looking at like the S&P options, you would select your expiration date, and then you would simply, as I wait for this data to come up, you would simply close out the position prior to expiration. So, if you anticipate the S&P to go up, you can go out to the, generally I don't buy within under 30 days, but, let's say I'm going to go out to 28 days to the April 15th expiration. I anticipate the market's going to go up, and you can buy calls. And just like a stock, you buy them at a price, you select your number of contracts, and then if this underlying security moves in the anticipated direction and those calls pick up premium and make money, you can then sell out of them just like you could with a stock. Hopefully that's answering your question. I'm not sure I answered that correctly, or if that's what you meant, but it's basically how it works without getting too complex with it.
Yeah, I think so.
Okay.
Carl says, can you show a Forex example?
Yeah. And I do trade the currencies. I mainly do it through futures. So, there were some pretty big moves here. This is the Australian dollar. I'm just showing these because I traded a bunch of these. Like I got in on this signal on the Australian dollar. But this would be, some example. Yeah, we could look at like I don't know if there's a certain pair you want to look at. We can look at pound yen as a pretty good volatile pair. So Great British Pound versus Japanese yen. Holy cow, that's quite a spike there. 130 down to 110. Wow. Yeah. So again, just like with Forex, when you're ranging and flat like this and the bands are close together, you kind of get some nice little profitable trades with maybe some break evens. And then as volatility expands, these can really work out into some nice winners. But two really nice short trades here on the pound yen. Zoom out for you here. See, this is a buy signal that these are kind of like off of a lower band. That's a really nice long trade there. Generally, in answering, I think might have been Frank that asked, I really like the signals that we get after a big move, because those tend to be the big reversals, right? So it's when the market's moving flat or sideways like this, these are the signals, although basically only one out of these five triggered, right? Because it was this one here. None of these actually hit the suggested entry price. So no harm, no foul. If you put your orders in here, you wouldn't have even been filled on the trade. But I wouldn't have likely taken these anyway, because the market, maybe this one I would have, because I wouldn't have known yet that was a big move, but this one didn't fill or get triggered. But once things start moving sideways, I wouldn't have taken these because they're just they're lower probability. What I really like is a big move, like this was a nice long profitable trade, and then I wait for the sell signal the other way, boom. This was a big move, then I wait for the buy signal, boom. This is three huge winners in a row right here. And then, like I said, I would have probably put my order in for the sell signal because it was after a big move, but it didn't get triggered. It never hit the sell stop limit order down here. And then we start moving sideways, and then I start ignoring these. So what I'm really looking for is opposing signals after a big move. And they won't all trigger, especially if the momentum's really strong. This was a sell signal. I would have actually probably put my buy stop order in on this green signal, but again, this one didn't trigger. The entry price would have been just above this bar, and it's good for up to 3 candles. We never hit it. Let's try to take if there are any more questions just kind of on the market, let's try to take those real quick. And then for anybody that wants more information on the trade trend signals, Richard and I are going to stay on for a few minutes past the market session, just so there are a lot of people on the session with us that already have and use trade trends. So I don't want to waste anybody's time that's already using it. But if you have any questions about the trade trend signals and you don't have it, we're going to stay on for a few minutes after the session to answer those for you guys. Anything else, Richard, we want to touch on the market before we sign off?
No, I think you pretty much covered. There's a handful of questions, but like Tony and a couple of the other guys, but those questions can be answered in the replay because you already touched on those. So,
Okay. Yeah. If you guys like jumped on late or something or missed something, that's why we record these. We will put that up in the member section. So, so you're able to go back and rewatch those. But if you do have any other questions as you watch the recording or something comes up, always feel free to email us at support@altostrading.com. We're more than happy to answer anything, related to the market, or certainly if you're in one of our services, we're happy to help you. So just shoot us an email. We do get a lot of emails, so bear with us and give us, a day or two to get back to you, but we do get back to you as quickly as we can. So hopefully you guys got a lot out of the session today. Keep an eye on that level again on the S&P that we talked about. If anyone's interested in asking any questions about trade trend or wants to learn any more about it, again, Richard and I are going to stay on for a few minutes to talk about that and answer any questions you have. So we'll go ahead and do that. But for those of you that already have trade trend, I wish you guys happy trading, a good rest of the week, and we'll see you on our next session. So Richard, we can go ahead and stay on if that works for you.
yeah, sounds good.
Okay. All right. So we want to do some Q&A around trade trend. Again, we had a lot of people on the session tonight that already haven't used trade trend, so I don't want to take up somebody's time. But if you don't have trade trend and are interested, I can answer any questions for you on it right now, just in terms of how it works, what it works on. Basically, it gives you buy and sell signals on any security, Forex, futures, equities, and ETFs. And it will do so in any time frame. And so we're happy to answer questions. And we've actually, we put together a little special deal if you guys want to try trade trend out for yourself and see how well it works. We're going to give you an opportunity to do that too tonight. But first, I want to answer any questions that you have. So it looks like Frank has one, Richard.
Yeah, let's see. There's a handful.
Or go ahead. Yeah, why don't you just tell me kind of like what questions are coming in?
Yeah. So there was a question earlier about if there's any sort of video references for actually using trade trend for options like buying and selling, or.
Yeah, great question. Yeah, so we hold regular monthly live trade sessions with trade trend for our trade trend members. And we actually also record all of those and put them in our members section. And we've done some really cool sessions around buying options using trade trend and how to structure the trades, how to use contingent options orders around the signals, and how to do things like vertical debit spreads and different option strategies around that. So if you decide you want to try out trade trend for yourself, you do get members area access to all of our past sessions, and we do teach all of those strategies around that. So that's a good question.
Yeah, let's see. Like specifics, like can you share some intraday signals on SPY, SPX, S&P trade trend signals?
Just on the SPY, you said?
Yeah, some intraday.
Yeah. So again, it works on any time frame, and basically, right now there's been so much volatility that a lot of these signals don't trigger because you get the market reverses so quickly. So I might zoom out a little bit and go to like a, let's try an hourly chart. But you can see basically the accuracy of the signal. On a red signal, it's basically telling us that there's a high probability the market's going to go down, and on a green signal that it's going to go up. So these can be very accurate in terms of market direction. And so we have, members that use these in a lot of different ways. Some use options to play these, some simply trade the shares, some use set take profit levels, others use our trailing stop levels. But basically, once it gives you a signal, and you put your order in, you know whether it triggered what based on the dots. So like here was a sell signal. Well, here was a sell signal, and the signal is good for up to 3 bars. So right now we're looking at an intraday hourly chart. If it doesn't hit the suggested entry price in the next 3 bars, then it doesn't result in a trade, and you won't see the confirmation dot. So that's the case here. We had a sell signal, but the market actually didn't follow through. And so this didn't result in a trade. Here was a buy signal that resulted in a little bit of a profit. And of course, you see the confirmation entry there. And then you have your trailing stop. So it actually tells you exactly where to get in and where to get out. And then here was a sell signal. This one triggered on the second bar, or second candle. You have your trailing stop levels. And this one locked in a really nice profit. That's basically how it works. It does work on all time frames, and the beauty of the trade trend signals is that it adapts to market conditions. So it does a really nice job at getting you in the market when there's a high probability of a big move, as you see here on some of these buy and sell signals that resulted in some pretty nice intraday profits. And it does a good job at keeping you out when things are not conducive. So even in volatile times like this, it can do pretty well. But it works on all time frames, and you can use it on any security that you have access to in your charting platform or your broker platform. Frank's saying, I've been buying calls with your app, with trade trim when I see the green up arrow and puts when I see the red. That would be an aggressive way to do it, Frank. Generally what I do is, and again, you could see this on the trade sessions, is I will enter a contingent options order. So like on this sell signal, it would give you the sell signal price, and I would enter a contingent options order to buy a put at a strike price closest to the suggested entry price. And I would only buy the puts if the underlying security hits that level. That would be the conservative way to wait for the confirmation. But certainly we do have members who are more aggressive, and once they get the arrow, they simply buy the puts or they buy the calls. You're just not getting that extra added layer of confirmation. All right. So I'm saying, like, what's the best time frame to use? Really, I tell people it's really you're up to you, your personality. I tell people that trade off daily charts. It's probably not better. It's probably not a good idea to trade intraday. And I tell day traders who are very good at day trading, why mess with anything else? So if it ain't broke, don't fix it. I personally don't do much intraday trading. I mainly trade off the daily charts, and I use this software to make a living in the markets and do very well with it. But again, I do that only trading daily charts. But again, a lot of that's a personal question, because some people don't want to sit at their computer all day, and I'm one of those people. But some people enjoy it, and so again, it can work on any time frame. All right, so I see a lot of questions coming in regarding getting access to Trade Trend on their platform. And so we put together a special for you guys today. If you don't have access to Trade Trend, we do have a signal package. Normally we sell an annual subscription for Trade Trend, but we realized that these are definitely volatile times, and you may want to try it for a shorter time. So what we've done is we put together a 6-month package for you to try it out for the next 6 months on the web-based platform TradingView. And the 6 months of signals is an $894 value if you were to purchase the monthly subscription option. It also comes with our live trade sessions. So we hold regular live sessions like we've done this evening. And that's a $550 value. We also offer personal coaching on our live trade sessions. So Richard and I actually hold the sessions ourselves, and we'll coach you through how to use the software effectively to make money in the markets with the buy and sell signals. We do also give you exclusive only invitation access to our Facebook group. We also teach how to adjust losing trades or fix losing options trades. That's a $900 value. And we basically, the end goal with all of these sessions and the Trade Trend Signal software is to help you guys trade whatever market you trade in whatever time frame with consistency. And so that's the package we put together. If you guys haven't used Trade Trend and want to try it out, we're also throwing in a couple bonuses. Our professional trading series online course. This is 10 hours of online content, which teaches all of our best options and stock strategies. It's a $595 value. You get immediate access to it, and it's all online. You can take it at your leisure. And we're going to throw in a second bonus, how to create risk-free trades. This is our newest ebook that runs through a strategy that I use in my own personal trading account, as well as my hedge fund, to manage trades and drastically reduce the risk in virtually every trade that I do. It's a really cool technique. And again, I use it in my own trading and my hedge fund. So generally the value on this package, what we would sell it for all individually, is well over $5,000. But we put together a special 6-month deal for you guys. So if you want to try out Trade Trend for 6 months, it's only, excuse me, $497. So we took 90% off the retail price that we sell all of these items at individually. And to do that and try it out, you can simply go to tradetrendlive.com and you'll have immediate access to everything that we've mentioned here. It's a great opportunity, especially in market conditions like this, to answer a lot of unknowns and answer the questions that you guys are wondering in terms of where do you get back into the market? How do I predict the sell-off? You guys saw for yourself, Trade Trend predicted the sell-off on February 20th, a day before the market tanked. So it is predictive. It is an algorithm that actually is forward-looking and has the ability to determine with a high degree of accuracy which way the market is going in the near to medium term. So it's a really invaluable tool that I truly believe that it will make all the difference in your trading in terms of being on the right side of the market and actually predicting market moves instead of using lagging data like so many of the indicators do that are available on today's retail trading platforms. So it's an invaluable tool. I wouldn't trade without it. I don't trade without it. I hope you guys do decide to try it out. And this is a really special opportunity to do it at a very reduced price and get all of the extra incentives like our free trading and sessions and support and extra bonuses that come along with it. Because not only are you getting the signals by themselves, which are a huge value and savings off the regular $8.94 retail price for 6 months, you're also getting all the extras. So that's only at $4.97. And then if you decide you want to stay on and keep the subscription, it would just renew every 6 months at $4.97. So you're locked in. You'll never pay a higher price for it. There's no commitment. So if you decide you don't want to continue with it, then you can simply cancel and you don't need to continue the subscription. I'm very confident you guys, once you see the power of it, you'll want to stay in. So again, just go to tradetrendlive.com and you can join our special package. We're just doing this for our session today. So it's good through midnight tonight. And then we're going to take the 6-month subscription option down, but we wanted to give you guys the opportunity because we realize things are kind of crazy right now and you may not want to commit for a whole year, and that's fine. So again, tradetrendlive.com. Any questions, Richard?
Let's see. The price be available tomorrow. I mean, if it's close and you're not able to get the computer, that's fine.
Yeah, Peter, shoot us an email. I mean, I realize, if you're traveling, we don't want to be unfair. If you're traveling or you can't, get to a computer or something. I know we had some people call in today that aren't at their computers. Just shoot us an email. We'll work with you. But we are taking it down at midnight, so we'll have to work with you over the phone or figure out a way to do it. So yeah, thanks for that. No problem, Peter.
And also, TradingView is free to use. So you don't have to set up a new broker account. It's in the cloud. You can get it on the internet anytime, any place. And it's there's no sort of fees to join it,
right?
Which is really great to know. And
yeah, Tony, after the 6 months, if you decide you want to keep using it, it would just renew at that special price.
That's right. So with the coaching, that comes down to the live sessions that we're doing. You're basically getting one-on-one coaching with Jeff and I on these sessions. You can ask as many questions as you want. We don't hop off until all the questions are answered. If you have questions, you can obviously email us. And today I did 2 calls with other coaching students who had some questions, and I worked with them. So we'll do whatever we need to do to get you guys comfortable on this. I think a lot of people are kind of surprised that we would price it this low. And I think usually, if we go to our grocery stores, we see that hand sanitizer is $20 and getting toilet paper is like hardest thing in the world right now, and they're just jacking prices up. And we're not doing that. We're going the other way. Like, we know this works. This is like crazy times. I mean, if you look at like the Titanic sinking, like we actually have a raft for you that predicted this sell-off and does a fantastic job of picking the bottoms off when they bounce. And, we want to make sure as many people can have it as possible. So we did cut the price in half. We did say, hey, look, you can do it 6 months, so you don't have to go as long as a commitment. I mean, it's, what is it, 70, $80 a month? I mean, that's less than half the cost of our regular trade alert services that don't come with coaching. And this,
Yeah, it's a really great deal. I mean, this thing is worth far more than $497 just catching one trade off the bottom of this sell-off. So I really hope you guys see the value in that. And we've really kind of dropped our shorts here, taking 90% off of this package, but we're here to help you guys out, not to take advantage of people in times like this. And so that's what we're doing. We're going the other way. We're almost out of toilet paper here at the house, but I still got trade trend, and that's really all I need. So I'm happy, and I hope you guys see the value in that and try it out. Any other questions, Richard, before we sign off?
let's see here. See if there's anything in particular here. So no, you don't need a brokerage account to use Trade Trend on TradingView. It's kind of like pulling a recipe off the internet. If you want to cook some barbecue in your kitchen, sometimes you got to pull a recipe off the internet, and that's what Trade Trend is. You just pull it off of TradingView, put it in your own platform. Some folks have Fidelity or E-Trade or any of these other types of brokerage accounts, so you don't need to open up anything special to have Trade Trend. With it being in the cloud, you can take it wherever you are. As long as you have internet access, you can pull it up anytime.
Yeah, the beauty of the TradingView web-based charting too is they actually have the best mobile platform of any that I've ever seen. I mean, better than Thinkorswim, better than TradeStation, better than Ninja. I mean, it's really impressive. It's easy to use, so you can get these signals on the go. We have a lot of Trade Trend members that use the TradingView mobile app, and they'll just take the signals on the go and then simply put the order in with their broker. Okay. Just kind of browsing through to see if there's any other questions. So it's easy to do in terms of it gives you the exact entry price on your chart, kind of like what we looked at. So there's no guesswork, and then it gives you the trailing stop, and all the signals are 1 to 3 bars in advance. So regardless of what time frame you're trading in, if you're trading off a 5-minute chart, you're going to know 5 to 15 minutes in advance where you need to put your entry price and which way the market is likely headed. Really, there's a huge value behind our live trade sessions too, because we really get into and you get access to all of the past ones when you join, but you basically get all the extra information, like how to manage the trade, some of the different tricks and tips that I use in my own account and in my hedge fund. You do also get, just seeing another good question, you get immediate access to all this. So if you guys join today, you're going to get immediate access to the members area. Richard's going to get you set up tonight. And then everything you see here you get, we'll email you all the bonuses. And then you'll also get access by tomorrow's trading session. As long as you get your TradingView username over to us, as soon as you get that, we activate your license and you get immediate access. So you can start using this as soon as tomorrow. So it's just a matter of whenever you get your username over to us. So. Well, it looks like we pretty much got it, Richard. If you guys have any other questions, feel free to just shoot us an email again, support@altostrading.com, or you can fill out our contact us form on the website, whatever's easier for you. But again, to take advantage of this 6-month special subscription, just go to tradetrendlive.com. I really appreciate all you guys coming tonight and watching our market overview session. It's kind of allowed you to get a taste of what we do in our regular sessions. And I really hope that everybody stays healthy and takes care of themselves. And I hope we get through this chaos very quickly. I know it may drag out, but eventually everything will calm down. And I just wish you guys the best in the meantime. So I hope you all take care, and we'll see you very soon.